Yo, Scott with Freedom Flow Empire, and today I'm going to show you and explain to you the 4 ways a single rental property can generate you money and help you build your wealth and your passive income. So, if you're unfamiliar with what we do here at Freedom Flow, what we do is we help you maximize your income potential with a high value skill and sales, and then we use that to create a systematic business and increase your passive income, ultimately achieving financial freedom. So, in this video, I'm going to explain not 1, not 2, not 3, but 4 ways that real estate is going to help you achieve that by being passive, giving you passive cash flow every single month, and also building your wealth. Now, guys, look, if you're interested in this kind of content, I want you to subscribe right now, go ahead and like this video, and hit that notification bell so you can be notified whenever we post content just like this. So, before I dive in, it's going to take me about 5 to 10 minutes to get through. So if you don't have 5 to 10 minutes to sit there and learn about the 4 ways a single rental property is going to build wealth for you, then just go ahead and click off this video. I'm not going to be mad. Go watch a cat video because this isn't for you, and you're probably going to struggle with building wealth and passive income through real estate. So let's go ahead and dive right in. So the first way that a rental property will generate income for you is through cash flow. You heard it, cash is king. And let me break this down for you. So when you have a rental property and you have a tenant in place, this tenant is going to pay you monthly income every single month. Let's just use an easy number just for this example. Let's say a tenant's paying you $1,000 a month. So $1,000 coming into your bank account every single month. Now, this property has expenses. So when you buy a property the right way, you're going to have your mortgage payment, which is principal and interest. You're gonna have taxes every month. Taxes you pay twice a year, but if you average it on a monthly basis, you're gonna have monthly taxes, and then you're gonna have insurance payments. On top of that, you're also gonna have repairs, and you're gonna want to set aside some money for what's called capital expenditures. So those are big ticket items like your roof, your HVAC system, your hot water heaters, etc. And after all of that is accounted for, whatever is left is going to be cash flow that comes in every single month. And the great thing about rental real estate is when you analyze a deal, you're able to determine how much rent a tenant's going to pay you for that property, and then you can actually calculate exactly how much your expenses are going to be. So when you buy the property, you're going to know approximately what your cash flow is going to be. And that's the first way that real estate can generate you money. Now, the second way is what we call principal paydown, also known as equity buildup. And what this is, we just previously talked about how the tenant is going to pay you every single month, and then you have to pay your mortgage on top of that. However, you're paying your mortgage and your tenant's paying you every single month, so the cash flow that you're generating, when you pay this mortgage payment every single month, we've already touched on that you're paying the principal and you're paying interest. Now, the part of that payment that is principal, every single month, your total loan value will go down by that amount. So let's say you have a mortgage and your mortgage payment is $500 a month. Let's say 200 of that goes towards the principal and 300 goes to interest. Well, you just reduced your total loan amount by $200. And from the first part, you're already cash flowing because the tenant's paying you, but now you've also paid down the principal. That means you owe less on the loan, so when you sell, that money comes straight into your pocket because the loan is being paid by your tenant. And this is the second way that real estate generates you money every single month. The third way is called appreciation. And what exactly is appreciation? If we look at real estate, we know from analyzing decades and decades of data that real estate typically only goes up in value. And certainly there are years, like if you think about the '08 crash, where real estate can decrease in value, but the intent of these rental properties is we're gonna hold them for the long term. We're gonna hold these for 30 years plus. So ultimately, in the grand scheme of things, over the long term, these values of properties are only going to continue to climb. And that's what we call appreciation. So if you bought a property today and it's only worth $100,000, in the next 30, it may appreciate, call it 3 to 6% every single year. That property might be worth $500,000 when you're 50, 60 years old. So if you bought it for $100,000 now and you can sell it for $500,000 in the future, you just captured $400,000 of appreciation over a period of time. And that's the third way that you can generate money in real estate on a single rental property. Now, the fourth way, and lastly, the way that a lot of people do not consider when they're analyzing a property is something called depreciation. And no, this is not the opposite of appreciation that we just discussed. This actually is on a whole nother thing, and it directly affects your taxes. So no, this is not depreciation with the house depreciating in value. This is depreciation on your taxes, because let's face it, Uncle Sam only wants to take money away from you that you've earned, you worked hard for. And this fourth way that you can generate money through real estate is going to lower the amount that you have to pay to Uncle Sam. And isn't that great? So let me break this down for you. So guys, the IRS is not your friend. And let me just make a disclaimer. I'm not a CPA. I am not giving accounting advice. I'm not giving financial advice. So don't listen to what I'm saying. I'm probably wrong. So this is just my opinion, but this is what I'll say about this. So I'm going to break this down for you guys. When you buy a piece of rental real estate, the auditor for that county that you buy it in is going to have two assigned values for this property. They're going to assign it a land value, which is the amount that they think the land is worth that the property sits on, and then they're going to give it a property value, also called the improvement value. Now, whatever this improvement value is, you can actually depreciate that amount over 27 and a half years on your taxes. So for example, let's say we bought a property for $150,000, and the auditor, the county says $50,000 is the land value, $100,000 is the improvement value. Now, if you take that $100,000 and you divide it over 27 and a half years, that's roughly $3,600 every year that you can reduce your taxable income. So how this relates to this single property, let's say you're cash flowing $200 a month. So over a 12-month span or 1 year, you're gonna make $2,400 net profit in your pocket just from cash flow. Now, typically, if you worked a job and you made $2,400, you get taxed 20, 30% on this. But because we're able to depreciate up to around $3,600 from our taxable income, we only made $2,400 and we can depreciate $3,600. So we actually pay zero taxes on that income that we made from this one property. Now imagine if you had 10, 20, 30, 40, 50, 100 houses, all making you $2,000 a year. $200,000 a year and you pay zero taxes. That's how you build wealth, because that money is in your pocket. It is net income in your pocket that you can use to buy more assets that will generate more passive income and ultimately build a bigger freedom flow empire for yourself. And that is the fourth way. That way gets overlooked by a lot of real estate investors that are just starting out. And I want to make sure that you know about it, because now you are familiar with the 4 ways that you can make money in real estate. Now you can go out there and get your own deals, make a lot of money, and just live the life that you ultimately want to live. So if you found this video useful, if you think that it can help you achieve financial freedom and you're ready to start building your real estate empire, I want you to go ahead and subscribe right now, like this video, hit the notification bell so that you can be notified for future videos. And lastly, I want you to click the link in the description right now. We have a free Facebook group that you can join, and you can ask me questions directly and I'll answer them personally, one-on-one, and you can connect with the other like-minded people in the community and just give you a lot of value there. So I'll see you inside the group, and I'll see you next week in next week's video.